Hi, and welcome to my weekly financial news show. I'm David Wilson, a CPA, and I will be presenting the news to you with my opinions, of course, which are my own and not meant to be financial or legal advice. I'd love to hear your thoughts about any of the stories I cover below in the comments. And on to the news. So we're going to talk about some tax news here today. The first one we're going to cover is about the 20% pass-through deduction. And the couple things I want to highlight is first, the IRS did come out with some clarifying information about that. You'll find some articles in the comments below, or the description below, with some more details about that. But today I just wanted to highlight that. First, if you're married, filing joint, and your total income, that is W-2 wages, capital gains, and other things, is below $315,000, then you just take the 20% off and are only taxed on 80% of your small business income. If you're single, married, filing separately, or head of household, the amount is $157,000, and then you just take 20% off your business income and are taxed on that 80%. If you're over those two amounts, a couple things you need to take into account is if you're a service business, you probably don't qualify. And what the IRS means by that is if what you mainly sell is your reputation and your skills, then you don't qualify for the deduction anymore. Unless, of course, you're an architecture firm, engineering firm, or have a business in rental properties. You can probably still take it. But there are several other considerations. And there are a lot of specifics to take into account when trying to figure out how much of the 20% deduction you qualify for, and also if you may want to make any business changes, like change your structure or anything like that. So for more information, check out the article, like I said, in the description down below, and also check out the tax calculator I created to help you figure out what your estimated pass-through deduction might be, because it may not be the full 20% if you're over the $315,000. So check that out. On to some tax crime news. So there's a couple articles I want to hit on, but the first one is from Accounting Today. They release an article every month which lists several different people who've committed tax fraud. So I want to hit up on three different ones. The first one is a Minnesota businessman. His name is Scott Phillips Flynn. He pled guilty to one count of conspiracy to defraud the U.S. and one count of filing a false tax return. Flynn underreported income by tens of millions of dollars between 2005 and 2015, intentionally evading an assessment of at least $3.5 million. And the thing to note there is the years for which he committed tax fraud, 2005 to 2015, and the amount, of course. And why those things are good to note is just because the IRS doesn't catch you a year or two later, if you committed tax fraud, they can go back as far as they want to have you, they'll assess your taxes and charge you. And the next person is from Newington, Connecticut. Terry D'Amanto was sentenced to 70 months in prison for tax fraud. Terry submitted several false tax returns for the 2007 tax year, one of which requested a $14 million refund. And like I said before, that was from 2007. So just because it's been 10 years since you committed some error with your tax returns doesn't mean the IRS won't still come after you. And then the last one I want to mention from that article is, that's the next one we're going to talk about, is a CPA from California. Mark Howard Berger has been convicted on 3 counts of aiding and abetting filing of false returns. Mark was convicted of willfully assessing and preparation of 3 false tax returns, which underreported $18 million in revenue and resulted in unpaid taxes of more than $4.7 million. So, of course, that CPA is probably no longer a CPA, may have prison time, and will definitely face fines and penalties, as well as his client, who will have to pay back taxes, penalties, and interest, and may also go to prison. So the point here is it's not a good idea to purposely defraud the federal government. They will eventually catch you, even if it takes 10, 11, 12, 15 years. But if they convict you or think you've committed tax fraud, they go back as far as they want. So just don't do it. If it seems a little fishy, if someone's recommending preparing your taxes in a way that seems fishy, just don't do it. So we're going to move on to the article you saw there for a second from Kelly Phillips about Trump's former attorney, Micheal Cohen. The reason I want to bring this up is the main things he were convicted of, or the majority of his convictions, were around fraud, for tax fraud and then bank fraud. So we'll hit up the tax fraud real quick. The quick summary of that is he failed to report more than $4 million to the IRS, so over a 5-year period, and has agreed to pay $1.4 million in restitution. He also committed 1 count of bank fraud and 2 counts of campaign finance fraud. But I don't really care about those 2 things for this news show. I just think I wanted to point out again that just because you think you got away with committing fraud or doing something a little bit shady, the IRS will eventually catch you. And especially if you want to be a politician or in the public eye at all, you shouldn't commit tax fraud, because that gives your enemies, whether political or otherwise, an easy way to come after you and get you thrown in prison. So just don't do it. And if you think your CPA is doing shady things, find someone else. So that wraps up the tax news, and on to business news. There are 2 main articles I wanted to hit here. The first one is from another one from Accounting Today, where they look at a recent change from the AICPA, or the American Institute of Certified Public Accountants. They recently opened up the ABV credential to non-CPAs. So the ABV credential is Accredited in Business Valuation Credential. And so I think this is awesome news. I wish they would just get rid of the requirement of needing a credential at all, but that's beside the point. This is awesome news because for consumers, this means that the extra competition will lower the cost of business valuations and increase the quality of these services. Because that's what market competition does. It requires people to be better at their jobs, to stay in business, and to provide a better value. But sadly, of course, all the CPAs who currently hold this credential are pissed off about it, which I think is silly. But I guess that's their prerogative. They can do that if they want. The last article we're going to look at here is from Business Insider, and it is about Amazon. They're doing something a little bit crazy again. They're looking at purchasing a movie theater chain. They recently did something similar to this with Whole Foods, where they purchased that grocery market, and then all of the other grocery chains stock price dropped crazy. So it'll be interesting to see if they actually do follow through with this, what they decided to do with it, and if that causes other movie theater chains to their price to drop as well. Well, that wraps up the news for this week. Of course, check the description below for links to all the articles we covered. Let me know if there's any stories you would like my opinion on as a CPA in the comments below. Check out my website for blog posts with more details on different tax and accounting issues, and like and subscribe if you enjoyed today's news show. Thanks.